Effective interest method for amortization of bonds payable. The effective interest method, amortization of bonds payable, is the acceptable method in amortizing bonds by the accounting standard. Ngayon, how how effective interest method is applied in amortizing bonds? In my PowerPoint, I only give 4 steps, no, to apply the effective interest method. Number 1 is determine the value of the bonds at initial measurement. Importante po nating mahanap yung tamang valuation ng bonds at its initial recognition. Second, let us multiply the nominal rate or the stated rate to the face value of the bonds for the purpose of determining the interest payment in every interest payment date. Number 3, let us multiply the effective rate or the yield rate to the amortized costs of the bonds to determine the actual amount of interest expense to be recognized. And lastly, the difference of interest expense actually recognized and actually paid shall be added to the amortized cost if the bonds were acquired at a discount. Otherwise, it will be deducted if the bonds are acquired or sold at a premium. Okay, to clearly illustrate these steps, I prepare a short problem. For example, a 10% 1 million bonds payable was issued for 952,200 which yield at 12%. Interest are payable annually. Let us assume that in this illustration, the interest payment will be good for 3 years. No? Okay, let us assume that the interest payment is good for 3 years starting December 31, 2020. Okay, take note that the nominal rate is 10%, the face value of the bond is 1 million, and um the fair value or the amortized cost of the bonds on the date of its issuance is 952,200 and the effective rate is 12%. The 952,200 is the selling price, which we can say or conclude that the bonds were sold at a discount for 47,800. Okay, yung 47,800 na yun po yung i-amortize natin. Okay, I prepare an amortization table to illustrate the amortization of the said discount. Take note that the amortized cost of the bonds on the date of issuance is 952,200. On December 31, we will pay an interest for 100,000 pesos. Saan pong galing ang interest na to na babayaran? Ito po yung sinasabing step 2. 10% multiply by the face amount of the contract of debt or of the bonds, yun po yung interest payment natin, which is 100,000. Sa lahat ng interest payment, okay, kasi this is a term bond, lahat 100,000. How about the actual interest expense na dapat i-recognize? Ito po, pabago-bago. Depende po. It will keep on increasing if the amortized is keep on increasing. Meron naman times that the interest expense actually to be recognized magdi-decrease if the amortized cost is keep on decreasing. Okay? So, saan po galing itong 114,264, 115,975 at 117,760? Itong 114,264, binase po natin ito sa 12% ng 952,200. So 12% of 952,200, we have 114,264. Ibig sabihin, what actual interest expense na meron po tayo is 114,264. But we actually paid only for 100,000 pesos. The difference of these two, the interest payment and the interest expense, yun po yung amortization natin sa discount, which is 14,264. In this case, this is a discount. This amortization shall be added to the 952,200 so that we can identify the new amortized cost as of December 31, 2020, yung 966,464. Same on December 31, 2021. Itong 100,000 galing pa rin po sa 10% ng 1 million pesos. Yung 115,975.68 galing naman sa 12% ng 966,464. Yung difference ng dalawa is the amortization of the discount. Because this is a discount, the amortization is being added to the amortized cost na 966,464, lalabas yung 982,439. And so on. Ganun lang po yung proseso on the amortizing the discount. How about if it is a premium? If it is a premium, lalabas po nun, mas mataas yung binabayaran kesa sa actual interest expense. Therefore, magiging negative po yung amortization once you deduct, you get the difference between interest paid and interest expense. Yung amortization na na-compute nyo, ibabawas nyo yon sa amortized cost if it was issued at a premium. Dapat, masasabi nyo lang kung tama yung ginawa nyo po sa amortization table if at the end of maturity, dito, assumption natin, after 3 years, the maturity is December 31, 2022, at the date of maturity, the face value and the amortized cost, naging equal po yun. Okay? Yun po yung target natin on the amortization table. That at the end of at maturity, the face value and the amortized cost will have the same amounts. Okay. Paano po natin gagawa ng entries yung nasa amortization table? Okay, simple lang. On the date of issuance, we debit cash for 952,200 kasi ito po yung pagkakabenta natin. We have a discount of 47,800, then a credit to bonds payable. Date of payment, remember, we actually pay 100,000. Okay, from December 31, 2020 to December 31, 2022, itong entry na 100,000 at credit cash na 100,000, same entry po ang gagawin natin. Okay? On the amortization of discount, because this is an amortization of discount, the pro forma entry would be debit interest expense din credit to discount on bonds payable. Okay? Itong 14,264, galing po yan sa difference na na-compute natin ng 100 versus 114,264. Okay. How about, sir, on the following period? Same entry pa rin, papalitan lang po natin ng ibang amounts. Sir, what if the amortization is for a premium? Balik ta rin po natin yung entry on the amortization of discount. We will debit premium on bonds payable when then credit interest expense. Ganun lang po yun kadali. Hopefully, naintindihan nyo po paano i-apply yung effective interest method of amortizing bonds using this simple illustration. Salamat po at Magandang umaga sa lahat.